Ted, I'm glad you're on with us. You can give us your market feeling. I was just looking at Bitcoin, still under 10,000, but you're watching bonds and equities and thinking maybe stocks are a little inflated at this point. Is that right?
Well, Nicole, that's right. I mean, at 22 times, and if you look at the Nasdaq to, for example, the Russell 2000, it's about 7 times that. You haven't seen any. All of those things are reminiscent of 99, early 2000. But the main thing is that when you're looking at valuations, you just can't get there from here.
So you're saying if someone wants to put some money to work now, what should they do? Not do it because it's just too expensive, or what?
Well, for us, when new money comes in, we have new money that comes in most weeks. And on the equity side, we probably use about half of that. We don't use much more than half of that right now. We own equities, obviously, but the number of things we think are undervalued have really gone down. And so we keep that to a situation where we feel like at some point in the future here, we'll have a chance to really replenish that and take that extra money and put it in and really average those prices out. I think that's where, as a portfolio manager, you have the hardest time at highs, because you're going to have to make a decision on whether you feel like where things are priced correctly.
So when you look at some of the names that you like, you talk about Alibaba and UnitedHealth, and a theme that I saw in both is they're both number one. You like the names that are leaders.
Well, we do, but for this reason. If you own the companies that have low debt, and you think their free cash flow can grow at a higher than normal rate over the next 5 years, that's where you have to look right now, because so many of these companies with the COVID and the things that are going on in the economy, they're not going to be able to put up the numbers. And so we're looking for companies that can go ahead and push through all of this and still do fairly well. And so that's what we see in those companies.
Right, and I know that you look within the numbers too of Alibaba, for example. Tell me a little bit more about the potential for this type of company.
Well, if you look at a company like Alibaba, number one, they don't have a lot of debt, and secondly, they're the Amazon of China, if you want to look at it that way. But the other side of that is that they have just, their transition to the cloud is really just getting started. They have a lot of room to move that. And so we feel like they've got a lot of potential over that next period. Can the stock come off in price? Sure. If the market breaks down 20 or 30%, this stock's going to come down as well. But it's a company that we think can weather the storm if you're looking out over the next 3 to 5 years.
Yeah. And, cloud had a tough week, actually, this week. But I know that people like it for the longer term. Just to put it in perspective, IGV and also the cloud ETF. The cloud ETF's down 6% for this week. So this group really, which are normally the stars, underperformed for this week. Tell me a little bit more about UnitedHealth, why you like this one.
Well, they're number one in the business, first of all, and they've got 2 or 3 segments. If you look not just at the healthcare side, but they also, have prescriptions. They cover the whole area. If you look at the demographics here, the demographics would tell you that, COVID aside, just the demographics over the next 5 years, companies like UnitedHealth will have to be doing better. There's really not a way around that, I think, for them not to be doing well over the long run. They do pay a dividend. It's about 1.6 or 1.7%, which is okay as well. But we look for them to do all right over the next, all the next 3 to 5 years.
Mm-hmm, mm-hmm. I know you were also looking to some of the energy names. I thought that was interesting, looking at the income side of things. As oil sits at $40.93 today, some of these names I think you've told us about before, and you continue to like them. Tell me about some of the energy area names that you like, Ted.
Well, we like those we have a strategy we run called high income strategy, and it goes for the highest income places we can go. And one of the things we like about energy right now, a couple of things. We think the dollar will go lower, and if the dollar goes lower, that's probably going to help the price of energy. Number one. Number two, you're rolling over. You're getting far enough out on the supply-demand side to make a difference. On the pipelines that we like, which are Enterprise and Magellan, you have to start thinking about this, and that is a lot of pipelines are being held up right now. People don't want those easements to come through. They're becoming like railroads. A railroad easement to go east to west right now would be very hard to do in today. Pipelines are getting to be the same way. Why? You see why Warren Buffett bought Dominion Pipes. The other one, which is a smaller one, is Brigham Minerals, and we mentioned that before, and oddly enough, it went from about 12 to 15 or 16. It's back again to 12. All three of those are 10% plus income streams. I think that's going to be really important on the income side going forward.
Yeah, absolutely. So those are three great names to watch, no doubt. And then when you give us your outlook on what's going forward, right? Your crystal ball, let's say, Ted, where do you think the markets are headed, short term and long term?
Well, short term for us really is over the next 3 months. And I would not be surprised to stay in this choppy market where you come off, you go up, you come off, you go up. But it looks as though to us that the leaders in the Nasdaq all of a sudden over the last week or so have started to get some chinks in the armor. That's usually the first thing that starts in the marketplace. And so over the course of, say, the next 3 to 12 months, obviously we think the markets will come in. We're higher priced now, Nicole, than we were back in January with no COVID, basically. So obviously we feel like that it's a problem for people just to keep saying, oh, yeah, we think things will be better a year from now. We just can't get there when you look at the economics of what's going on in the U.S.
So if near term you expect some sort of pullback and you think these NASDAQ names that have been faltering a little bit are the beginning of that, what kind of pullback are you looking for? Something, slight or something more dramatic?
Well, it wouldn't surprise us at any time to see the market come off 8 or 10%. However, I would have to say that those leaders in the Nasdaq would probably do more than that on that kind of sell-off, just because that's where the profit is. And you've got so many retail investors now, these really small investors. They're having an impact, and they like these stocks, but they've probably never seen them go down either. So we'll see how that works.
Yeah, it's painful, right? It's always great when you're making money and awful when you're losing money. So if the major market averages drops 8 to 10% in the Nasdaq, the Highfliers drop more than that, would you step in and buy at that point?
If they hit our numbers, we run about 200 stocks on a screen for right now, and we only have a couple, 2 or 3 that are really in buy range for us. But if you have a lot of companies drop into that, yeah, we'll use some of that cash for sure. We don't necessarily we're not market timers per se. We just look at the valuations of the individual companies.